Let's put this question to Glen Wood, Head of Sales Global, Mitsubishi UFJ Morgan Stanley Securities, online with us from Tokyo. Glen, morning. I'm going to ask you point blank. I don't think I can be blunter than blunt about this, but let me ask you, again, point blank. Have we had our fun? Have we had our run in the market? And is that it? And then we're going into 20 years of hibernation again?
Hi, Bernie. Hi, Cody. It's good to hear your voice again, and it's obviously a very exciting day in the market. The easy answer to your question, Bernie, is no. As I mentioned the last time I was on with you, Japan is going through some very radical changes. Those changes have not stopped. Things have not reversed. It's full speed ahead. Has the timing been in line with perhaps market expectations? Maybe not. As Cody said a minute ago, have the specifics been there to support what investors were looking for? Probably not. But we should know that that's Japan, that's the way Japan operates. Is there huge change going on, both in the government, in the Bank of Japan, in Ministry of Finance, in METI? Absolutely. There's massive changes in the pipeline, and that's not priced into this market. And the volatility we're seeing today is perhaps fast money or short-term traders taking some money off the table, but this is certainly not the end. This is the beginning.
So why the snowball effect, though? You would think that, you know, if there were even level-minded people like you out there, there's got to be others out there, value seekers, who do see this as a market which never benefited in the last quarter century, and finally starting to see some structural changes. It's almost like they expected, you know, them to snap their fingers and instantly create a free-for-all labor market with free hire and fire capabilities, free passports to anybody who, I mean, nobody does things that easily. Nobody can do immigration reform overnight. It does take a consensus. This is a democracy. People seem to forget.
Absolutely, and you're right that this does take time. I think a couple of major points I just mentioned, Bernie, is we talked about it last time as well, but a lot of the global long-only, really fundamental-based investors are still sitting on the sidelines in terms of Japan. They're still underweight Japan. They still are sitting there saying, show me, after the Koizumi days when they were really disappointed with the results. They're sitting back to the Abe government saying, show me, and we really need to see some specific plans coming out of the government. We really need to see, okay, this is what we're going to be doing 20 years from now, and this is what we're going to do this year, and this is what we're going to do next year, and this is how we're going to execute this to get to where we're going. I think the second point I would mention is quantitative easing now is a global phenomena. It began in the U.S. People gradually jumped on board. Japan is now on board. The fact is QE isn't new. It's not something that Japan can stand up and say, look at what we're doing now. What they have to say is what we're going to do with the money. So we're making a lot more money. What are the efficiency gains? What are the productivity gains that we're going to get from that money? And how is that going to be globally competitive? And how is that going to improve Japan? And they haven't stepped up and done that yet.
Glen, it's Oriel here in Sydney. As you just mentioned, you know, this is not purely about what's going on in Japan. It really is a global picture, especially when you see the sell-off that we're also seeing in some of the major markets in Asia, like China and, of course, Hong Kong as well. When it comes to the Japanese market now, I mean, we're down by 6%. We're sitting at 12,497. That's well below that key 13,000 level, which we were watching very, very closely on the markets yesterday. What's the end point here? I mean, in your view, you're saying that this is probably a correction. There will be bargains out there on the market. Just how low can we go, in your view?
Well, one of the major technical points next is 12,000, right? And I think if we cross there, it gets into very dangerous territory. That said, you know, the long-term story here, if we're talking 6, 12, 18 months, this market, I believe, is moving higher. And we're also moving to a much weaker yen rather than a stronger yen. So if I was a long-term fundamental investor, I would be looking at this as a buying opportunity.
What is the target for you if you think next 12 to 18 months we're moving higher? I mean, we were talking about 16, 17,000 yesterday.
12 to 18 month basis, personally, I look for the market to be above 20,000.
Above 20,000 in the next 18 months?
Yes.
Okay. All right, Glen. Really good to have you with us on the program. Thank you so much for chatting to us. It's nice to have some optimism out there on a day like today when you take a look at these markets.